I'm sure you were privy to the analysis by Harsh on what the banking update so far from the private lot is looking like. Any comments on HDFC Bank? Any observations there?
So good morning. First of all, the systemic loan growth has been at about 10 to 15%. The deposit growth has been at about 10%. Now, on the back of this, we need to analyze banking results. HDFC Bank, really strong set of numbers. You look at it this way. First time since the merger, they have grown their loan book at double digits, about 12 to 14% of loan growth, about 14% deposit growth. So from my perspective, exactly as what the management had planned out, slowly and steadily the loan growth will come back. And as the loan growth does come back, the deposit growth will sustain and the LDR will come down. The HDFC Bank stock is marred in a lot of speculation around the 81 bond issue and the chairman issue. So I don't think there will be too much positive reaction. However, from a business perspective, particularly on the loan and the deposit side, really very strong numbers from HDFC.
What do you make of the deposit growth, Aditya? It seems to indicate that a lot of the deposit growth is back-ended and just it's the quarterly average adjustments don't really signify very strong growth, but it's going to be the quarter end which has really accrued all of the deposits. Do you believe that that is the case? And if so, would you be concerned at all? Because LDR actually has risen for HDFC Bank if I look at it on a quarterly average balance perspective.
So Harsh, ever since the merger, one thing that has been really very strong for HDFC Bank has been the deposit growth. So I'm not too much worried there. What I think will happen over a period of time, if the stock market continues to be difficult, continues to give negative returns, we are sitting on a 2 year negative return on many of the mutual fund schemes as well. So what will happen is a small incremental flow of money into the stock market could come back into deposit. This could be some bit of relief for the bank. Mind you, not all of it will come back. Some bit of it will come back. So a little bit of pressure on the CASA will abate to a large extent for only for the larger banks, say an HDFC, ICICI, SBI, and Kotak for that matter. But I'm not too much worried about the deposit growth. Bulk of the problem lied on the loan side of it, lied on the NIM side of it, which I think will take time. For a bank like HDFC Bank, NIM takes a lot of time to come back. So from my perspective, I'm not worried on the deposit growth. Major bulk of the problem would lie on the loan side and the NIM.
They just want to move to some of the smaller plays, AU Small Finance, RBL, extremely good growth posted by them. Does that tell you that confidence is sort of genuinely returning back to MSMEs and microfinance, or is it just banks sort of chasing volumes with riskier lending?
Absolutely. So the micro lending cycle has probably bottomed out to an extent that NPA formation is now stalled. And banks will now embark on an aggressive growth cycle over the period of next 1 or 2 years. You look at Suryoday, you look at RBL, to some extent Ujjivan as well. A lot of these banks started to report good loan growth numbers. So from my perspective, the pain point, the microfinance cycle has turned around. Mind you, this was before the war broke out. Now the war has broken out. I believe there could be some bit of slowdown in lending for a shorter period of time as the war continues, and it will impact the lower segment of the society. So from my perspective, before the war, the microfinance cycle had bottomed out. Now we need to see how this war impacts the loan growth, slowdown in loan growth, and from there on we need to take stock of what.
How do you see the numbers coming from the PSU banks? While private sector has done well in this quarter from a loan growth and deposit point of view, even the PSU banks have seen a decent 14-15% jump in deposit and loan growth.
So from my perspective, PSU banks will continue to do well. As the cycle continues to move on, at least for the next 1 or 2 years, PSU banks will do well. Many of these banks have reported numbers in the range of 10 to 15%. And of course, deposit growth is never a problem for PSU banks. So from my perspective, PSU banks will also do well. But I have a contra view. Everybody in the market is bullish on the PSU banks, and rightly so. They've done a lot of cleanup. I believe banks like HDFC Bank, where now we see a valuation low of 20 years, I think a significant delta can be created if the bank does the right takes the right step. It comes out of all the mess that they have created for themselves, and the NIM story and strategy start to improve. That's where I think a lot of alpha can be created. However, PSU banks, I think SBI is the best place there. SBI will do exceptionally well over the period of next 1 or 2 years.
IDFC First, though, from what I'm reading right now, Aditya, was one outlier, right? Slower growth, but extremely strong CASA. Is that a red flag, or do you think IDFC is actually better positioned than it looks right now on the headline numbers?
So IDFC generally would grow at about 25 to 30%. Given what has happened, I think there could be some bit of moderation in growth over a shorter period of time until they come out of this mess. IDFC will book the entire fraud amount in this quarter. So I don't think numbers would really look good for IDFC in this quarter. But I'm not too much concerned with that incident. How IDFC moved forward from this incident, how Vaidyanathan controls uh, the fraud and he does not let it spread to other parts of the bank will be the crucial point for IDFC First Bank in the shorter term. In the longer term, the franchise is really well placed. I think they will do continue to do well over the period of next 3 to 5 years.
And Aditya, what about the NBFCs? Plenty happening there as well in terms of growth.
Particularly for Bajaj Finance, I wanted to point out that the deposit growth has degrown this quarter. We need to see what the management really says. Were they able to offer higher deposit rates or not? But from my perspective, 20% loan growth is just fine. But the deposit growth degrowing for Bajaj Finance is something that I will be concerned about, and we will be asking this to the management. Apart from this, steady numbers, nothing to complain about.
So right now, clearly SBI seems like the top pick, Aditya.
Absolutely, within the PSU space, SBI, a contra pick would be HDFC Bank, although it is the number one constituent of the market. A lot of beating and a lot of drama around the 81 bonds and the chairman resignation has taken place. So, from my perspective, I will not be surprised if domestic mutual funds go ahead and buy the stock because it is on a relative valuation at its lowest, and the seeds for future growth are already there on the bank. So from my perspective, SBI, HDFC Bank, and of course the growth pick will continue to remain ICICI Bank as it embarks on a growth cycle over the period of next 3 to 5.
Okay. Very curious to know what Kunal's views on some of those names are, and we'll come straight to that. Let's slip into a very short break, come back on the other side, take Kunal's views on that space. Stay with us.